Okay guys, so here we are with another Tesla video. So I've been reading your comments guys. So we're going to do basically, this is the last video I'm going to upload before earnings on Wednesday after close. So I wanted to answer your questions. So the bulk of this video, we're going to talk about whether Tesla stock will dip down lower towards $700 before earnings. So before I go into that, I want to kind of give a quick background on what we are expecting for Q1. So as we hear, I'm on electric.co, and as we can see here, basically Tesla now, so Tesla is already going to have good deliveries. So they already released their Q1 2020 numbers, saying that they had 88,000 deliveries and a production of 102,000. So guys, I want to give you a quick background of what's going on. Basically, now there has been a bit of a downturn. So while it's been the best first quarter ever, it broke a series of quarterly growth for 3 quarters in a row, ending with Tesla's record quarter in Q4 2019 when the automaker delivered 100,012 cars last quarter. So revenue is expected to be a little bit down, and they're expecting an earnings per share consensus of a loss of 32 cents. So while a lot of people are going to see that number, they'd be a little bit, frightened by that number. Basically, I want to show you guys how Tesla has beaten estimates by a lot in the past. So if we go here and we look at the historical Tesla earnings numbers. So I got this information on marketbeat.com. So all you have to do is come here and then you can just simply scroll down here. You want to go under earnings. Okay, so as we see here, we have the consensus estimates of what's going on. So we can see here that Tesla has beaten negative earnings estimates by quite a lot in the past. Just in Q3 2019, the consensus estimate was around 42 cents and they reported $1.86. And this translated into some massive growth. So if we basically take a look at the 1 year graph here, we can see that when they had that massive earnings beat, that's pretty much what sent Tesla on this massive bull run. So, your guess is as good as mine on what they're going to report. Obviously, they had a pretty good quarter and they've reported positive earnings per share the last 2 quarters. And I know that Tesla, in the back of their mind, they're trying to be included in the S&P 500. So it would be very nice if they could potentially hit 3 positive earnings per share quarters in a row. Obviously, in Q2, it's going to be next to impossible because a lot of the factories have been closed down. So as you can see here, it says it's likely we're going to continue to be a world card. Financially, Q1 shouldn't be that bad, but analysts are going to be looking for Q2 and full year 2020 outlook, and that could be dire. So it says with Tesla's Fremont factory likely being shut down for the entire month, Tesla's production Q2 will be extremely limited, and so would sales. So guys, to answer your question quickly on what I think about what's going to happen, will Tesla stock dip back down to 700? Well, it's very likely. But if Tesla has a good earnings release, we could hit another resistance and support level. So usually when a stock breaks through resistance, that becomes its support. So I want to show you guys a quick chart here. Let's break it down to a little bit smaller chart. So a 6-month chart. So as you can see here, Tesla had a lot of resistance at around $950. So if they can somehow get the 3 streaks in a row of positive earnings per share, because remember now, most of those factory closures were towards the end of Q1 anyway, then what will happen is this 950 will become support. So when you break through resistance, that becomes support. So how do you play this if you want the stock to dip down? Well, you have to use limit orders. So what you guys want to do is you don't want to just sit there and watch the stock price and wait for it to go down. You use a limit order. So a market order executes exactly when you put the order in. So if you put the order in to buy Tesla stock, whatever the current price is, that's what the order is going to be. But you can actually use limit orders to purchase a stock if it dips down. So that's what I recommend sometimes when I say buy the dip. So it is potential that Tesla stock could go down a bit before on Wednesday's session because the company is going to report earnings after market close. So let's say you entered a limit order in here, perhaps maybe the stock price comes down a little bit more, maybe down to like 750 or 740. But if they report a good earnings report, you can bet your bottom dollar that that stock is going to gap up in pre-market on Thursday, and then it'll be too late. So what I would say is, guys, use a limit order if you want to buy Tesla stock at a certain price. And I wouldn't dibble or daddle too much with 760 or 750 if you really want to own it, because there's a large short ownership on Tesla. So as you can see right here, over 10% of the shares outstanding are short, and there's over 20 million shares being shorted. So what could happen if Tesla gaps up? All those short sellers are going to get squeezed out, and they're going to have to buy the stock to cover their position, and then the stock could go even much higher. So that's one of the reasons why Tesla is such a volatile stock in general. It has a lot of short interest. So guys, it'll be pretty exciting to see what happens, after hours when Tesla reports earnings, and I'll be sure to update this because I post a video on Tesla Monday through Friday every trading day. So please thumbs up this video if you enjoyed it, and subscribe to my channel for more videos on Tesla. And I'll definitely post a video on that earnings report to give you guys the 411. So that's it for now, guys. Take care.